Welcome back to the Customs GST Advisory channel of customsgsd.com. Today we are discussing an issue affecting majority of the importer. Imagine this: you import goods. You correctly describe them. You upload the invoice, catalog technical literature in CESTAT and HSN classification. Customs assesses and examines the bill of entry and clears the goods. Months later, a notice arrives: wrong classification. Duty shot paid, Section 28 invoked. Can Customs really do this after accepting your classification? And if every self-assessed bill of entry is an appealable assessment order, why does Section 28 exist at all? Today we are going to answer this question at the deepest legal level, using Supreme Court judgments, recent Customs Excise and Service Tax Appellate Tribunal Delhi decisions, and the emerging doctrine that full disclosure destroys the allegation of suppression under Section 28(4) of the Customs Act 1962. Lawyers often mix up three different concepts: self-assessment, appeal against assessment, recovery of escaped duty under Section 28. The Supreme Court in Priya Blue Industries and later in ITC Ltd held that a self-assessed bill of entry is still an assessment order. If the importer wants refund or correction, the assessment must normally be challenged in appeal. Many people then jump to a wrong conclusion. If assessment is final, Customs can never reopen it. That conclusion is legally incorrect. Think of the Customs Act as creating two different roads: appeal by the importer under Section 128 as Road 1, recovery by the department under Section 28 as Road 2. Appeal asks, was the assessment wrong? Section 28 asks, did duty escape assessment? These are not the same question. An assessment may become final for the importer, yet the statute can still permit reopening for recovery of escaped duty. Now let us answer the real question. Can Section 28 be issued when document required for classification was uploaded in CESTAT and fully disclosed and accepted by the proper officer? The answer is yes for the normal period, usually no for the extended period based on suppression. This distinction is the heart of modern customs litigation. Suppose the importer declares correct description of goods, correct quantity and value, technical catalog composition, intended use on the claimed tariff heading. Customs accepts the declaration and clears the goods. Later, the department may still say, we now believe the correct heading is different. That is a classification dispute. Section 28(1) can be invoked within the normal limitation period for short levy, but to invoke Section 28(4), the extended period, the department must prove suppression, willful misstatement, or fraud. And this is where recent Tribunal Delhi decisions become extremely important. Let us build the doctrine from the Supreme Court order in Northern Plastic Ltd versus Collector of Customs. It was held. The court held that when relevant facts were before the department, mere wrong claim of exemption or classification does not automatically establish suppression. In Padmini Products it was held. Suppression must be deliberate withholding of material facts, not a mere erroneous understanding of law. In Chemphar Drugs it was held. Something positive other than mere inaction is required for invoking the extended period. In Pushpam Pharmaceuticals it was held. The word suppression must be interpreted strictly because it has penal consequences. These judgments were not customs-specific in every instance, but the principle has repeatedly been applied in customs matters. The emerging constitutional idea is simple. The customs authority cannot convert an interpretational dispute into an allegation of fraud merely because revenue is involved. Now comes the most practical part. In several recent Delhi tribunal matters, the tribunal has drawn a sharp distinction between correct description versus disputed classification, incorrect description versus concealment of goods. Where the description, catalog, and product literature were available on record, the tribunal has repeatedly held that the extended period is not invocable merely because the department later prefers another tariff entry. The reasoning is powerful. If the officer could determine the alternative classification from the very documents supplied by the importer, then the alleged suppression was not by the importer. It was at best a difference of opinion or an error in assessment. This is the line of reasoning now gaining strength in customs classification litigation, especially in technology products, machinery parts, chemicals, and specialized industrial goods. To be intellectually honest, we must also examine the revenue side. The department argues, acceptance of self-assessment is not a conscious adjudication of classification, and there is force in this argument. In many EDI clearances, goods are facilitated without detailed examination. Therefore, customs may contend that there was no considered decision on classification, and escape duty can still be recovered. Courts have often accepted this for the normal period, so do not make the mistake of arguing that acceptance of the bill of entry creates absolute immunity. It does not. In practice, ask these 5 questions. First, was the description of goods completely accurate? Second, were catalogs, drawings, or composition details uploaded in CESTAT? Third, was the claimed tariff heading expressly declared? Fourth, did customs have the same material now relied upon in the notice? Fifth, is the dispute interpretational rather than factual? So here is the 1-minute conclusion. Can Section 28 notice be issued? Yes. Does acceptance of bill of entry give complete protection? No. Can normal period demand survive? Yes. Can extended period be invoked when all facts were disclosed? Generally no. Is wrong classification equal to suppression? No. The most important trend in recent customs jurisprudence is this: full disclosure transforms the case from a fraud narrative into an interpretation narrative, and once the dispute becomes interpretational, the constitutional threshold for alleging suppression becomes much harder for the department to cross. If you found this analysis useful, subscribe to Customs GST Advisory. We don't just explain sections. We explain the litigation strategy behind the section. Comment below, has customs ever changed your classification after clearing the goods? And if you want a dedicated episode on ITC Ltd, Priya Blue, and the constitutional limits of self-assessment, tell me in the comments. Thank you for watching. Do like, share, and press bell icon for new notification.